Hi everyone, I'm Ben. I'm a chartered accountant and chartered tax advisor based in the UK, but do a lot in this space, trying to help people navigate both the tax. I'm not a lawyer, but obviously the regs come into it, as you will find out from what we say. It's probably worth saying, probably on all our behalves, that anything you hear today is not tax advice or regulatory advice. It's for entertainment purposes only, but your entertainment, I'm afraid, is not guaranteed. But please stick with us, because we'll plan to try and do it anyway.
Did you say entertainment?
I did.
Okay, so I guess I have to come up with a joke. No, I'm just kidding. Hi, I'm Maneisha. I am a CPA in Canada, and I deal with a lot of crypto companies as well as NFT projects and companies. It's a really interesting time. But yeah, we're going to kind of go through a bunch of different things. My experiences is kind of a bit of US and Canada, but my main focus for tax is in Canada. So when I'm speaking from a tax perspective, I'll be speaking from a Canadian perspective. And as Ben said, informational purposes only, but we'll try to capture everything we can.
Hello. Oh, okay, that works. Hi, I'm Wyatt. I definitely won't be telling any jokes. I'm an international tax specialist. So whilst I practice in the UK, and that's the main jurisdiction that I trained under, I will advise on multiple jurisdictions. I head the crypto and digital assets team, and I mainly advise Web3 corporates on their cross-border structuring, as well as token incentive planning and relocating founders to more tax-friendly jurisdictions.
Good morning. I guess the only joke is I'm massively overdressed. I'm Jonté, Harrell. I'm the CFO and Chief Revenue Officer of ZenLedger. We simplify crypto taxes with software. So please check us out if you need to find out where you stand within minutes. I'm based in Miami, and interestingly, I have visited almost 100 countries and lived in, for 1 year, I had to do 4 different tax returns. And so I am familiar with the pain. So let's dive in. Amongst us, we had a Zoom and we had a few chats, and so there's some hot button issues. So I'll let you guys dive in and I'll try to facilitate.
Do you want me to start? Okay, so we get involved when the regulatory lawyers have said you can't issue your token in whichever jurisdiction you're in. So whether you're in the UK, US, Canada, any highly regulated jurisdiction, you can't issue your token, so you have to offshore. And then most of the time, the lawyers will say you need to go and speak to the tax people. That doesn't always happen. And then, so it's a simple solve from a regulatory perspective. Set up a company in the BVI. The BVI company does your token issuance. But most countries will tax, whether it's individuals or corporates that are in that country, on their worldwide income and gains. So we have, if we take the UK, we have 50 years of tax law, and we have 100 years of case law preventing individuals or corporates setting up a company in a tax haven and parking profits there. And so those rules, and every jurisdiction has them except the tax havens. So all of Europe has these anti-avoidance rules that stop you from doing this. Most jurisdictions call them controlled foreign company rules. Places like the US have like 4 different versions. We have like 5 different versions in the UK, all trying to solve the same thing, but multiple sets of rules. You have them in Canada as well. And so these anti-avoidance rules effectively deem the income, gains, or profits of the company to either belong to its parent company or to its founders or its shareholders, individuals. And so, you know, what's the problem with that? So if you've got, let's say, a UK company or a US entity, with a BVI subsidiary, and that's deemed to belong to its UK parent or US parent, then potentially you end up with double taxation because the way it's allocated to the parent is like a profit. So you've got loads of costs in your devco. You can't actually deduct them against the NFT sales or the utility token sales. So one, there's double taxation. If you as individuals set up a BVI company directly, then you're paying income tax at like marginal rates, usually around 45% in most jurisdictions, on your token revenue. So there are a number of complexities. So yeah, you could either set up a BVI subsidiary, for example, or you do it directly, but you have to find a way to bring that income back into your devco. Like it has to come back, usually as like license and service fees. Otherwise you'll have the double taxation.
Thanks for that. I know in the US, wherever we go in the world, we have to file, and we have a foreign income exclusion of, I think this year, $120,000. And so above that, you don't pay individual taxes. Under that, you don't pay taxes. Maneisha, can you talk about Canada and the rules there?
Sure. Can I just ask a question to the audience?
Sure.
So how many of you have some companies? Okay, and how many of you are just individuals looking for kind of like information? And the rest of you are just here for a nap. So that's great. So I've gauged the audience. Okay, so I guess I'll speak a little bit of...
So it's about half-half.
Half-half, yeah. So I'll speak a little bit about individuals and then a little bit about corporate, maybe, just high level. And Jonté, what exactly were you hoping for me to talk about? Was it just...
That exactly, because so we have an international crowd, and it's half-half between individuals seeking increased knowledge as well as a company structure, which, as we know, is much more complex, but you can simplify.
Okay, awesome. So like, if you're looking at Canada as a jurisdiction, essentially, so we do have the tax authority in Canada, the CRA, Canada Revenue Agency. They do have like guides out, so they do want you reporting on crypto, whether you're an individual or a corporation. And very similar to the US, whenever there's kind of a disposition of your cryptocurrency, so that means going crypto to crypto, crypto to fiat, crypto, using anything with that crypto, like so if you're purchasing an NFT, if you're selling that NFT to get crypto, all of those are considered dispositions. And they want a little piece of that profit. If there's a loss, you can claim that against any profit as well. I think the main distinction is, in Canada, is you're really treated kind of under two buckets. It could be a mixture of these two, which is you either have it as capital property, that's your crypto, or it can be treated as business income. The distinctive factor there is the tax rates. So let's say you're an individual, even a corporation, only 50% of capital property is taxable in terms of profits, or losses are deductible 50%. Whereas if you make a profit on business income, 100% of that business income is taxed at whatever rate you are. So whether that's the corporate rate or whether that's the individual rate.
So do you see a lot of Americans going north to try to take advantage of that kind of, wave of the 50%?
Good question. I don't know if I see people going north per se. I have a few companies that did decide to set up shop in Canada, but I think the main driving factor for that is there's a Canadian-US treaty. And so they'd want to make sure they're in the proper jurisdiction so they're not ending up in this battle between the two where they're going to have to give a piece to each. So I think where you're kind of, like Canada's based on residency. So if you're kind of considered a resident there, you're paying taxes there. And you're paying taxes on your worldwide income. So no matter if you make income from another country, you're still going to be taxed on it in Canada. Unless there's a treaty, then there's relief, but...
Got it. That's good to know. Ben.
Hi.
You were leading the conversation about the hot button topics. I'll just let you dive in there.
Yeah, so I mean, it's kind of what you were saying earlier, Zoe, in terms of, it all starts with an idea. You have an idea, you want to do a project. Okay, where do we want to do that project? Where can we do that project? And we've sort of got to remember to some extent that it's globally competitive, right? It's where can I get it done, but where's the best place to get that done? And we sort of have an expression that we use quite a lot, which is don't let the tax tail wag the dog. But what we're obviously finding is that regulations are putting people into certain places, and hopefully they've taken the tax advice. Because if they haven't, that can be a bit of a nasty thing that's sort of waiting around the corner. Now, it's an interesting time at the moment because a lot of jurisdictions that people have gone to are updating, let's say, the regulations that they have. If you look at the BVI, they've updated their VASP Act, and it's all coming from, what happened in the last year in terms of Terra, FTX. It's all to do with anti-money laundering, counter-terrorism. And it is a competitive market in the EU. Next week they're meeting to hopefully pass MiCA, which is a very robust regulatory framework for this space. Excludes NFTs, unfortunately. But in Europe we've gone regulation first, probably innovation second. They lost out in Web 2, let's face it. And I think they're like, we want some of that internet money. So now they're trying to get on top of that in this space. Whereas in the US, you've got the innovation. And I don't even probably need to tell anyone here what's going on that side of things.
We're still figuring it out.
Yeah, no, I've got this anecdote. It's a personal story, but I'll share it with you. When I was 3, I was at nursery, and it was time to sort of tidy away all the toys. And I didn't want to do that, and I probably haven't learned from that ever since. But I went away and I hid under this slide. And there was another kid there, and I just sort of said, hi, to this other kid. And out of nowhere, the kid just bit me on the arm, which there's probably layers of trauma here that is now not the time to unpack. But I feel like that's what's going on with the SEC and everything else. Where's the conversation? It's aggressive enforcement. So, in retrospect, I'm thankful that other child gave me this opportunity to share that in this context. But it's really important to be having these conversations, both in line with regulation and in line with tax. And feeding on from what Zoe was saying earlier, people might go, right, we're in the UK, we can't do this. Where's the market? Okay, it's in the US. We're currently the shareholders, founders, but we maybe need to do some fundraising. What does our shareholder position look like after that? How does that affect them individually? Actually, from the bottom line of this, what are those tax points all along the way to actually make sure that we are retaining as much working capital as we can and not limiting what we are then getting to shareholders?
Yeah, thanks for that context. I do feel like I have been bitten, and we try to articulate it as regulation by enforcement. It feels like fines are being levied before you actually kind of figure out, how to be compliant. So on that note, Zenledger, we have investors in Australia, UAE, South Korea, Japan, Singapore. Do you find, Zoe, companies that are trying to figure out their international kind of comfort place? And what are you, I guess, what's your advice? What are the top things that the problems that come to you when dealing with international folks? I know you have the UK perspective, the Europe perspective, the international, and so I'd love to hear about that.
Yeah. You mean in terms of how you would end up structuring it,
exactly,
or what jurisdiction? Most of the stuff that we see would be, you've got a founder team that is split across a number of jurisdictions. So you might have a couple of UK residents, someone in Germany, someone in Canada. You might have someone in the UK that's also a US citizen. That really changes the type of structure that you can have. So the question is, do you have a UK devco? Do you have one in Canada as well? Do you group them together? How do you share costs? What's the relation between the two? Has one got a better tax rate than the other? Can we do some tax planning? And then what are your investors getting? So are they getting equity? in which case we really don't want to have, for example, like a US entity where there's withholding taxes on dividends at like 35%. You'd want to have, if you could, like a UK company, because there's no withholding tax when you pay dividends out. Or if your investors are getting tokens, then you can have more flexibility on where your devco is, because you're not thinking about where you're paying income.
So that's a playbook point. The devs, the location of them can help define the structure. And so I think everyone should definitely think about that, because it's not necessarily where the founding team is.
Yeah. And what we also see is most projects, like I've been advising kind of international, so multinational organizations for 15 years. And in the past, if a company wanted to move into a new jurisdiction, they had planned it, like it was a market they wanted to go in. So they either relocated staff or they hired people strategically. But in this space, you don't necessarily, anyone can work from anywhere. So suddenly we have startups with like, several people in multiple jurisdictions, and not realize, and either paying them as consultants when they're actually full-time employees, so all the payroll taxes are being missed, or they've got them as employees, but they haven't registered them. That's a branch, or most of the time it's a branch, which you then have to register, and you will have like certain like accounting filings, and you'll have to pay corporation tax. You have to allocate profits to that branch, and so that's being completely missed. And because there's a lot of like global employer of records, so a lot of companies think they're compliant because they're getting the payroll compliant at least, which is probably the worst part, but they're missing the corporation tax piece.
Wow. Maneisha, what are the topics I think most relevant right now for you? We've discussed so many, so I'd love to just open it up and have you talk about what's relevant right now.
Yeah, so I think Canada hasn't changed too much. I mean, they issue guides, but the guides haven't been updated or changed really, to be honest with you. I think one thing that had become super topical was sales tax. And I think this is not only in Canada, I think it's international. Absolutely. Because it's kind of one of those things, is like, where are you paying the sales tax? And different jurisdictions have those different rules. And Canada's been going hard at the sales tax piece, especially if you're a domestic Canadian company or self-employed like individual who has to pay that. So that's one piece. Never forget about the sales tax piece. It's always a good question to have in the back of your mind. I think people always think about income tax and corporate tax and individual tax, but they never really think about sales tax. And like, programs that you're using and stuff, they're really there to help you with that income tax piece, right? And to help you with or it could be, I guess, franchise tax perhaps, but they're not really there for that sales tax piece. So whenever, you see someone, be a good friend and be like, hey, have you thought about sales tax? I think that's probably...
That's definitely a playbook point, because it matters wherever you are internationally. Regulators may not be focused on it now, but there's a look back period. And I know in the US, Washington State has been probably the most vocal about it. I guess that's interesting because Jeff Bezos once moved from New York there to sell books with no sales tax, knowing it would be cheaper. So I guess they've learned that lesson. Ben, do you want to talk about what is on your mind right now as we've talked about a number of... Yeah. We love the child stories, so keep those going.
Sadly, that's the only traumatic childhood experience I'll be sharing today. But
that's a good thing.
no, I'll be sharing. I didn't say there weren't any others. That's just the only one I'm going to be sharing today. Yeah, I think the things on my mind, and they always come down to, and I would say this because of what I do, but it's getting the right advice, because I'm sure all of us here on stage have had people come to us saying, hey, I've done something. And we're like, right, okay, have you thought about X, Y, Z? And they kind of look at you blankly, maybe with a little bit of fear. And that's fine, that's okay, that's a fine place to be. But obviously our preference would certainly be that, we would be engaging with people beforehand, because it's much easier to set something up from the start and get it right with what's relevant at this point in time. Things may change in time, and maybe things might need to be looked at and revised. But often it can be much harder to try and have to unpack or unpick something that's already been done. And all of the, everything that everyone said here is entirely relevant. I love that you mentioned sales tax, because again, in the UK, our equivalent is VAT, and it's a big thing. Lots of people have gone and done projects, and it's an element that they do not consider. So yeah, those are some of the things on my mind right now.
I think that's an interesting point, because often, whether it's an individual or an entity, and I'm a CFO, and so I guess I get thrown all the questions about compliance and regulatory and tax and all of that. But the lens I take is, we can pay the cost now, or we can just understand the problem we face now at a kind of a touch point, a consultation, I would say like a half step, rather than making a large decision and then we have this massive cost and we have to unwind things later. That is a massive problem. And so like, at least that small amount of advice can pay massive dividends.
Yeah, sorry, because what you've mentioned there, alarm bells, that I should have said something. It might not be cheap, and I think that's what often puts people off. But I can guarantee everyone here that the cost of getting that advice and getting it right is cheaper in the long run.
Absolutely, in most instances.
I guess the only thing I would say is like a lot of my work was spent doing that exact thing, is people coming to me and thinking they want just like bookkeeping and their tax returns and accounting services. And then I look at this and they're like, it's simple. I just like moved a wallet to my company and like, you know, I sold these things, but it's simple. Like it's one thing, don't worry about it. And I look at it and I'm like, okay, but that's not how it works for tax and for accounting. And, you know, we gotta really like kind of sort this out, and it ends up being this larger exercise. So if you have the thought, if you're able to, I know it's really hard because in this area we're pivoting a lot and we're trying to capture the moment. It can be hard, but if you do have that first one-off conversation, I think that's great because it really will help you in the long run.
Zoe, any closing thoughts? We try to grab one question from the audience.
Closing thoughts. I might just carry on with this topic actually, because for anyone that's creating their own token and they're having a token allocation, often they will issue some sort of an agreement to raise funds. So they sell some tokens privately, at which point you've just crystallized a value for the token, let's say 5 cents a token. Then when you do your own token allocation, you've already got a value that's going to be deemed employment income or deemed dividend in kind. So you're looking at like 45% income tax. You're looking at employers' payroll taxes, so like at national insurance and the equivalent. If you sort your own token allocation out first, i.e. you've not created any market value, you can do a very simple cost-based valuation. Well, your cost today divided by total token supply gives you a price per token. It's usually like 0.00 something, and you buy them. You just paid the like unrestricted market value. You will not pay tax again until you sell. Well, you won't pay tax until you sell them, and then you're usually in capital gains.
That is money-saving advice. So we have 2 minutes left. Any burning questions in the audience? Don't all raise hands at the same time.
So, I was going to say, that's great.
Yes.
We have a question though.
Who might have some experience with taxes in regards to the United States and Bahamas?
That's a difficult one. I say that because FTX has made that path quite interesting, and the Bahamas will be cracking down more so than they have.
I think you also have to think of the structure. So if you've got like a foundation type company that no one owns, like it's orphaned, then the kind of US and say Bahamas the tax changes because you just separated ownership. But if you've got a US person that created a Bahamas company and they own it, then the tax is a lot more complex. So yeah, it depends on the structure, where the owners are, what it's doing, what gets paid back to the US, what doesn't. Yeah.
I would recommend maybe setting that entity up, again, not necessarily tax advice, et cetera. I would recommend setting that foreign company up first, raising funds or whatever, setting up whatever operational flows you have. Because if you set up a US company and then you go offshore, folks take the lens that this is to minimize tax. And so that you don't want that to be the purpose for that entity.
Awesome. Well, I guess, is that our time? Thank you for coming. I just wanted to say thank you for coming, and I hope you enjoyed your nap, for those who didn't raise their hand. You know, I got a little snooze in, and maybe I'll say on our behalves, you can find us on, I'm assuming, Twitter, and we'll have our contact information. You can search our names. We'll pop up. And yeah, I'm Maneisha.
I was Ben.
Zoe.
Jonté, thank you.